In this video, I'm going to go over the Chapter 1 Foundation 15 problem. And you can find this problem at the end of the chapter. Each chapter afterwards will also have what is referred to as the Foundation 15 problem. And I like going over these specific problems because they go through all or most of the things that were addressed within the chapter itself. So let's begin. In Chapter 1, they present the information for Martinez Company's production costs, and they tell us that the relevant range of production is from 7,500 units until 12,500 units. So what this means, and what you should have picked up from the chapter, is that the cost structure that we are describing here is applicable for a production level between these two values here. If you produce below that, then this cost structure is no longer valid, or if you produce above that, then the cost structure is no longer valid. So they inform us that the company produces and sells 10,000 units and that the costs on average are as follows. So we're given information on variable costs, which are your materials, your labor, and the variable manufacturing overhead, as well as sales commissions, which are variable dollar per unit, and then administrative expenses of 50 cents per unit. Okay, so when we look at what we need to solve here, the first question asked, for financial accounting purposes, what is the total amount of product cost incurred to make 10,000 units? So for the manufacture of 10,000 units, I'm going to calculate total costs for 10,000 units. Now, keep in mind that they mentioned that this is for financial reporting purposes. And for financial reporting purposes, we used absorption costing, which includes all variable cost plus manufacturing, and let me restate that, it includes all manufacturing related variable cost plus all manufacturing related fixed overhead cost. So that's what absorption costing is. In our particular example, we have direct materials of $6. We have direct labor of $3.50, variable manufacturing overhead of $1.50. So that includes these two items plus the $1.50 right here. And we do not include any of the non-production costs or non-product costs like administrative expenses and things like that, sales commissions. That's not included under absorption costing. And then the fixed manufacturing overhead is going to be on a total basis. So it might be better to just do that one separately here. So let me instead do that one on a total basis here. Fixed manufacturing overhead, they told us, was $4 per unit, and since we're making 10,000 units, that's going to equal $40,000. So to compute the whole total, we'll need to sum this up here, which is as such. So that's $11 per unit. I'm going to put a little line underneath here. So that's $11 per unit, and we are making 10,000 of these. So we'll add that over here. So the variable manufacturing overhead cost is going to be $11 times 10,000. And what we get there is $110,000. So the combination of the variable manufacturing overhead costs, of 110,000 and the fixed manufacturing overhead cost give us a total manufacturing costs or total production costs of $150,000 at the production level of 10,000 units. And by the way, you have to be careful with this $4 per unit for fixed manufacturing overhead. It just happens to be that this is the number they gave us at the production level of 10,000 units. So in other words, fixed manufacturing overhead on a total basis is $40,000, and that's really what you have to think about. It's $40,000 whether you produce 7,500 units or whether you produce 12,500 units or anything in between. It'll be $40,000. Anytime you go below 7,500 units, then the fixed manufacturing overhead costs are not going to be 40,000. Or anytime you go above 12,500 units, the fixed manufacturing costs are not going to be $40,000. So keep that in mind. You got to be real careful when you quantify fixed manufacturing overhead costs on a per unit basis, because that changes depending on the production level. All you need to know is that it's $40,000 in total for that level. Next question, number 2 here says, for financial accounting purposes, what is the total amount of period cost incurred to sell 10,000 units? So here in number 1, just to be clear, these are total product costs. So I just added this right here. And under number 2, they're wanting to know what are total period costs for that same level of production and selling for 10,000 units. Okay, so the first thing we have is the the variable. Where is it at here? The variable items for administrative and sales. So for the first one is sales commissions. That would be our first variable selling and administrative item. So we have sales commissions. Actually, let me put it down here. So sales commissions, that is $1 per unit, and we have variable admin, or just admin expenses, and that is 50 cents. So the total here is $1.50 per unit. And then since we are manufacturing and selling, and the key thing is that for this one here, when you compute the total cost, it's going to be based on the number sold. It just happens to be that in this particular exercises, we manufactured and we sold the same amount, but you would always base it on the sales, the amount that you sold. So variable S&A, selling and administrative expenses, will be $1.50 times 10,000 units, and that is $15,000. So again, let me repeat that. We manufactured in this particular problem, or in these two, number 1 and number 2, we manufactured 10,000 and we sold 10,000. For production costs, we base it on the number of units we produce, and then for sales costs, we base it on the numbers we sell. It just happens to be that it's the same 10,000 units here, but sometimes that's not the case. Sometimes you manufacture 12,000 units and then you sell 10,000. So you got to make sure you use whatever you manufactured here and then whatever you sold here. And then in terms of fixed manufacturing overhead cost, what do we have? We have 2 items. So first, let me go ahead and jot them down. So we have fixed S&A, which is made up of the $3 right here for selling expenses and the $2 for administrative expenses. So I'm going to go in here and selling is $3 per unit, and then admin, that's $2 per unit. So in total, we have $5 per unit. Okay, so when we do the fixed S&A, that's going to be $5 times those 10,000 units that were sold. So this right here gives us $50,000. And we can come over here and say total period expenses is the summation of that, which is $65,000. Okay, and I'm going to mention this again. This fixed S&A of $50,000, that's only based on the $10,000. I mean, excuse me, that $50,000 of fixed S&A expenses is only applicable to the sales level of 10,000 units. So in other words, even though they quantify this here on a per unit basis, that quantification was done understanding that you had sold 10,000 units. So in other words, what I'm trying to say is that it is $50,000 fixed S&A, whether you produce 7,500 units or anything above that, but not exceeding 12,500. So that is going to be $50,000 for that range. Anything outside that range, then it changes. Okay, moving on to the next question. Under number 3, we are asked, if 8,000 units are produced and sold, what is the variable cost per unit produced and sold? Okay, so this is real important. In the first two that we did here, we're using absorption costing, which means that the product costs are composed of only manufacturing costs. Now in number 3, we're going into variable costing, which under variable costing, the product cost is composed of all variable costs, whether it's manufacturing cost or period cost. As long as it's variable, we're going to include it as part of the per unit cost under that variable costing idea. So let me go ahead and do number 3 over here. And this is going to be, what is the variable cost, let me abbreviate, per unit for 8K produced and sold. So given that 8,000 units is within the relevant range, right here, between 7,500 and 12,500, it means that these costs right here on a per unit basis are valid. So what are some of the variable cost items? We have direct materials, we have direct labor, those are usually your first ones, variable manufacturing overhead, sales commissions, because that's variable. Now keep in mind, sales commissions is a period cost, but under variable costing, even though it's a period cost and not a product cost, it becomes part of the product cost. In other words, we include it as part of that cost of the item. And then variable admin cost, and then the total. So we'll put the total here, total variable cost per unit. So we have $6, $3.50, and this is all coming straight from the information right here. $1.50 for manufacturing overhead. That's this one right here, variable manufacturing overhead. Sales commissions is $1, and then finally variable administrative expenses are 50 cents. So when we quantify this to sum it up, we get $12.50. Okay, so initially when we looked at the cost per unit under absorption costing, our cost per product is $11. That's for financial reporting purposes, for GAAP, for generally accepted accounting principles, for that purpose. But for internal purposes, we compute a variable cost per unit of $12.50. And by the way, this variable costing idea for internal purposes is just one of some other options. There's other costing approaches for internal reasons, for internal purposes. And the idea there is that for managerial internal purposes, sometimes absorption costing is not the most appropriate. And we'll see little by little why that is the case. Okay, so that's the answer there for number 3. Let's look now at number 4, question number 4. The question number 4 is, if 12,500 units are produced and sold, what is the variable cost per unit produced and sold? Okay, so you should be thinking at this point that what is the difference between 3 and 4? And if you said none, you are correct. Because this, whether you produce and sell 8,000 or whether you produce and sell 12,500, that's still in the same cost structure range as these numbers are valid for. So in other words, it's the same thing. I could just copy this there if you wanted to, but it's really the same thing. Now, if we were outside of the out of that range, 7,500 to 12,500, that we would not be able to rely on some of these numbers. Things might change. And what does that mean? If I have to produce more than 12,500 at a particular point, I might not have enough machinery to do that. So some of my fixed manufacturing costs for depreciation and things like that might be higher at that point. It might not be $4 per unit. I might have to buy another machine. Anything, the materials, I might not be able to purchase materials at that price. Maybe I can get them cheaper if I'm buying more. Or maybe there's a limitation on materials, and if I need to buy more, it's actually going to cost me more than $6. So what we're saying here is this variable cost per unit is valid within this production level. Okay, let's now go to question number 5. If 8,000 units are produced and sold, what is the total amount of variable costs related to the units produced and sold? So in number 5, all they're asking for is, hey, what's the total cost? Okay, so what's total variable costs for 8K units produced and sold? So when we come over here, we determined that this was $12.50. So the total is going to be equal to $12.50. And let me put a little dollar sign here so that we're more clear. Times the 8,000 units that we produced and sold, and that's $100,000. Okay, and then under number 6, let me go ahead and write this. They ask us what is the total amount of variable costs related to the units produced and sold for 12,000 units. Okay, so let me cheat a little bit here if I'm going to write the same thing, except I'm going to change this to question number 6, and now it's 12,500 units. Well, it's going to be pretty straightforward. We're going to multiply the $12.50 times 12,500 units. And that gives us a total variable cost of $156,250. Okay, so a quick observation here. If I have different production levels, like we did in this particular case, we had 8,000 and then we had 12,500, and I'm using variable costing, I can quickly figure out what the variable costs are. Okay, that will change. All right, obviously, the more materials you need, the more labor you need. Now, we cannot do that so easily under absorption costing, and I'm going to remind you. And the reason we cannot change the production levels is because fixed manufacturing overhead of 40,000 is the total amount. So we would have to separate the fixed versus the variable cost in order to do that. In other words, I can't just if I'm going to produce any other level than 10,000 units, I cannot just go in there and say, okay, 11 plus 4, which is 15, is the total cost per unit. That value, $15 per unit in total, is only applicable at the 10,000 unit level. Anytime I get out of that 10,000 unit level, then I have to be careful not to quantify it at the $4 per unit of fixed manufacturing overhead. No, you always treat it as the $40,000 total, because that doesn't change. $40,000 is fixed within that range of manufacturing. And we'll be able to appreciate that a little bit more with the next questions here. So number 7 wants us to figure out what the average fixed manufacturing cost is. So let's go ahead here. That's a 7. Average fixed manufacturing overhead per unit for 8,000 units produced. Oops, my apologies here, I can't write. So the total fixed manufacturing overhead is $40,000. This came from what we did in number 1 here. So I'm relying on this. So let me paint this. So I'm just bringing that information down and saying, okay, that's my total, 40,000. When I do it on a per unit basis, okay, at an 8,000 level production, so number of units. If I have 8,000 units here, my I want to use the same terminology. My fixed manufacturing overhead per unit is going to be $5. So I'm going to basically divide the 40,000 divided by 8,000. So I want you to contrast this. If I'm at an 8,000 unit level production on a per unit basis, that's $5. If I'm at a 10,000 unit level production on a per unit basis, that's $4. And you know, this goes back to the idea of economies of scale. Obviously, the more we produce, the lower we can get the per unit cost of fixed items only. Okay. Number 8. Same question here. So let me just copy this so we can speed this up. So this is number 8, except that it's for 12,500 units. So I think you can see what's going to happen here, that if we produce more units, that fixed manufacturing overhead cost is going to continue to decrease. So this will be the same $40,000 of fixed manufacturing overhead. But now the number of units is higher. We're spreading that over more units. We're spreading that $40,000 over more units. So what's my cost per unit? That's going to be $3.20. That'll be equal to this divided by this. Okay, so we are seeing the effects of economies of scale, bringing that fixed manufacturing overhead cost per unit down as we produce more. Alrighty, and then number 9 asks us if, and I think this is now overkill, but if 8,000 units are produced, what is the total amount of fixed manufacturing cost incurred to support this level of production? So in other words, what is fixed manufacturing overhead at 8K units produced, the total? So let me put in here total, so we're clear. Well, we know that. It's nothing more than 40,000. That doesn't change on a total basis. Question number 10, basically the same thing, because now it's asking us, hey, what if I produce more? What is the total fixed manufacturing overhead? Same $40,000. As long as we are within the relevant range, that's what it is. So this is number 10, and this is 12,500 units. Now keep in mind, and I'm going to keep reminding you of this, okay? That's all within the production level of 7,500 units to 12,500 units. I might have way more fixed manufacturing overhead right after we start making more than 12,500. I might even be able to incur less than 40,000 if I make less than 7,500. How? I may be able to sell some of the machinery that I don't use. You know, if I start making less than 7,500 on a permanent basis, not just a temporary basis, then maybe, you know, maybe I'm producing 5,000 units every period. Then at that point, maybe I don't need all the machinery that I have. And then we can start selling some of that machinery, and that'll ultimately bring down this fixed manufacturing overhead. But as long as we are within that relevant range, our total fixed manufacturing overhead is going to be $40,000. Okay, so now let's look at question 11. Under 11, we are being asked, if we produce 8,000 units, what is the total amount of manufacturing cost, manufacturing overhead cost incurred to support this level of production? What is this amount or this total amount expressed on a per unit basis. So first, let's start by coming up with the total manufacturing overhead. So this includes both variable and fixed, okay? I know it can be a little crazy trying to go from fixed to variable and all that kind of stuff, but this now is going to be including both of them, all right? So the first thing is we know that variable manufacturing overhead was $1.50 per unit. That was given. So let me just take you back real quick. That was, where is it at? Variable manufacturing overhead of $1.50 per unit. So that's given. That's not a problem. And then we have to multiply that times 8,000. So this is 8,000 right here. And then this will give me total variable manufacturing overhead. We'll multiply these two. Okay, so that's $12,000 of variable components. Plus, we know that we have the fixed manufacturing overhead, and that was $40,000 because that doesn't change within that relevant range. So I'm going to keep this in yellow just so that we can reinforce that idea. So then when we do the total manufacturing overhead, that's the composition of both of those. So that's going to be 40,000 plus the 12,000, and that's 52,000. Maybe I don't need to space this out so much. So I'm going to bring this back a little bit here and here. And so that's the total manufacturing overhead cost. And then on a per unit basis, total MOH per unit, we're going to go in here and say, okay, equals $52,000, which is this, divided by the number of units produced, which is 8,000. And that gives us $6.50 per unit at the level of 8,000 units. Okay, so I'm going to emphasize that here, at 8,000 units produced. Okay, and then number 12, they're saying, okay, do the same calculation, but assume that you're making 12,500 units instead. Okay, so let me cheat a little bit again here, trying to simplify this. Bear with me here while I change some of the numbers. This is 12,500. This is number 12. And this variable manufacturing overhead is still 150, but now this is 12,500. Okay, so that changes this around as such. And notice that the only thing that I moved around was this here, the total variable manufacturing overhead. The more units I make, the more variable components I incur. That's 18,750 plus the 40,000 of fixed manufacturing overhead gives me 58,750. Now, on a per unit basis, this 58,750 divided by 12,500 is $4.70. So contrast these two right here. I want you to look at these. I'm going to paint this one in green, and then we'll paint this one in some other color, whatever we can find. Okay, so if you compare the green versus the blue here, this is my cost per unit. Okay, whenever I make this item, whatever this product may be, this is my cost per unit at the level of 8,000 units. And then this is my cost per unit at the level of 12,500 units. So you can see, you can appreciate how the economies of scale effect takes place here, because the more we produce, the more we could spread this fixed manufacturing overhead over more units and hence reduce our costs per unit. Then we go to question number 13 here. They're asking us, if the selling price is $22 per unit, what is the contribution margin per unit? Okay, so by definition, contribution margin is going to be the sales price minus variable cost per unit. find the letters here. That's what contribution margin is. So let's go ahead and do that math. $22 sales price, and then the variable cost per unit from, let's see where we did that one here. From question number 4 or question number 3, either one, it doesn't matter, because recall that the variable cost per unit are the same at whatever production level it is, assuming you're within the relevant range. So that was $12.50 per unit. So I'm going to go in here, and on a per unit basis, my contribution margin is $12.50. I'm sorry, the contribution margin is the difference between that, the $9.50. Every time I sell something, this is the way you think about contribution margin. Every time I sell a product, I'm selling it for $22, I'm incurring $12.50 in variable components, and I have $9.50 left over that I can use to contribute towards my fixed cost. Every unit I sell, I go in there and it's like chipping in $9.50 for all my fixed costs. So naturally, once you cover all your fixed costs, any amount of sales above that is going to be profitability. Okay? Okay, in question number 14, they're taking a little bit of a different angle on describing this, but don't let it confuse you. It says, if 11,000 units are produced, what are the total amounts of direct and indirect manufacturing costs? Okay, so let's just here go in here and say total direct and indirect manufacturing cost. I'm sorry, not manufacturing overhead, all of it, manufacturing costs. Okay, so typically the direct items are the ones we can trace directly to the item. So this is direct materials, direct labor, and those items, right? And anything indirect, usually we throw into overhead. Okay, so they're still both of them product costs. Let's keep that in mind. All right, it's just that some of it is direct. So let's go ahead and address the direct items first. So we for the direct items, we have direct materials and we have direct labor. And on a per unit basis, it's $6 and $3.50. That was given to us. So the total here of $9.50 is what we'll use to compute that. So direct costs, just to be more precise, direct manufacturing costs per unit. Okay, let me make this a little wider here so we can see that. And then indirect, let's go ahead and, well, we can do this right now since the number of units that they're asking for is 11,000 units. Then let's go ahead and do that math. All right, so this is going to be total direct costs of 11,000 units times 950. Okay, so that's 104,500 for the direct costs. And I'm going to put a dollar sign in here so that we can better distinguish it. Okay, and then our indirect costs, so let's go ahead and look at the indirect cost, is going to be composed of variable manufacturing overhead plus the fixed. So let's address the variable first. That's $1.50 per the chart, $1.50, and for the number of units of 11,000 units, that gives us total variable manufacturing overhead of, let's go ahead and compute that real quick, 16,500 plus, okay, don't forget the fixed now. Okay, so plus the, let me put it right here, plus fixed manufacturing overhead, which is indirect, and that's $40,000. We know that doesn't change because that's the yellow one that keeps coming back to us. And I'm purposefully highlighting that 40,000 so you don't forget that does not change. Okay, let me make some lines here so it makes it easier for us to know what we're adding and subtracting. So this is 1.5 times 11,000 gives us 16,500 plus the 40,000, and that gives us a total of Let me sum these two real quick. 56,500. Okay. Let me scroll this up. Okay, so to conclude, our total direct manufacturing costs are 104,500, and then our total indirect manufacturing costs are 56,400. All right, and then that takes us to our final question, which is 15. Finally, the question number 15 is, what incremental manufacturing costs will Martinez incur if it increases production from 10,000 to 10,001 units? Okay, so the only manufacturing costs that will change are the variable manufacturing costs. Now, by the way, your variable selling and administrative expenses will change as well, but they're only asking us right here for variable manufacturing overhead costs. So if Martinez increases production from 10,000 to 10,001, the manufacturing cost increase will be made up of direct materials, direct labor, and variable manufacturing overhead. Those are the only three items that will change, because our fixed manufacturing overhead will remain at 40,000. So this is going to be $6, $3.50, and $1.50. So when we sum this up, we get $11, which we knew from the manufacturing costs, right? So if every time Martinez increases production by one more unit within the relevant range, manufacturing costs are going to go up by $11. All right, this concludes the Foundation 15 problem for Chapter 1.